So, welcome to this week's edition of Futures Friday. Glad y'all could join me, hang out a bit, talk futures. So, I guess I'd like to apologize. I was a little absent. I'm not even sure if I posted anything meaningful for sure. Did not get posted by me in the main oil room today, per usual. I was focused early on with my private group of students, kind of very actively there, talking about what I was seeing moment to moment. We had a meeting this morning where we went through and I walked through. Here's what I'm seeing for today. Here's my hypos 1, 2, and 3. What I'm looking at potentially developing, and then I was just talking nonstop around my read as once the opening bell sounded. What I was seeing and looking for and doing. So I thought I would give you guys a bit of a recap there for the general public here. Getting my charts set up here. Right. So we got our two most trusty charts here. We got a market profile chart here, and we have our 1,000 volume chart here. So let's head back. Easing up on me. All right, so here we are at the open, right at 9 a.m. Eastern. And my thoughts were looking for a bounce play. Okay. I think we're in a condition here where a bounce is likely across multiple time frames. Just kind of, and I mean, you guys were even posting in the room talking about Crude has never had a 10th down day in a row. It's never happened. Got decent probability of that happening today, given that we're right near the opening print here, about 10 cents off of it. So we're all kind of saying, well, you know, this is we could see a bounce here based on how extended it is and things like that. I prefer for most of my analysis to be more grounded than things like that. I really do think that the term overextended is a very bad word and should be avoided. But I have market generated references that can tell me, hey, we're so far away from XYZ that this is typically unsustainable. So I still use market generated information to help me out with that. So levels that I had, let's go back. Let's start at the top. So you remember yesterday I was saying a destination could be the 60.45. Another level would be 59.90s. Another level would be 59.46. That's all that's really relevant today, so we'll just stick with that. So my hypo A coming into the session today was as long as we didn't really start to hold below 46 cents, to see some kind of a reaction and bounce from that general area, or even a little higher. Doesn't have to go all the way there, but as long as that's holding, I'm going to look for bounce plays where obviously we can go for the 59.94, and then all the way back up to 60.45, which my level's now cut off. We can't see it up there, but I'll adjust it. There we go. That's hypo 1. Hypo 2 is that we actually get caught in between these areas between this 46 and 94. We see a lot of rotational behavior there. And hypo 3, what I thought was least likely to occur today. That's how I rank my hypos. 1 is most likely, 3 is least likely. All are potential. 3 is that we actually begin to hold below 46, and I start to short off that area looking for extreme trend movement. I mean, it's really asking for a lot for that to happen. So that's what I laid out to my crew before the open. So once we got going, right into the open, I liked this general break, just getting long once we see the buyers come in right off the open. I mean, you could draw a trend line, whatever you want to see here. You can see it happening, right? It's a kind of a flaggy, grindy type of leg here that breaks, and we see some buying come in. So I go with the buying. Scale out into our level, which at the time was VWAP, I believe. And then give it a chance to hold. Give it a chance to hold. Oh, is it going to hold? Uh-oh, something's really wrong here. Give it a chance. Oh, man, get out. Something's wrong. Not happening. Okay. So pretty much break even on this trade. We pretty much pulled 30 cents out of half a position and lost 30 cents on another half. Nothing really doing there, but we put ourselves in a great position to take advantage of hypo 1 for the session. Progressing on. Okay, we actually see some sellers here. This is actually holding below this level. I'm interested in shorting. So now this is asking a lot. This market's already come from all the way up here and gone all the way down here. So we're asking for a lot for this market to just continue. And I'm aware of that. So yesterday in the Jigsaw webinar, we talk about tactics. I'm going to be a lot more aggressive in my management here of any kind of trade. So what do? We pull back and boom, I'm in this trade. Short, as soon as the sellers come back in, we're getting short. Not liking the way it's looking here. I end up just scratching out of this trade. But then we get a little bit of a weak kind of retest. Tries to do something a little higher, and then right at the tail end of that bar, boom. The sellers really pushed it. I'm going back and forth between those bars here. So during that bar, I re-shorted. So again, I'm seeing this as a little weak move here, and the failure at the top of that, boom, getting short. Within the contextual piece of below 46 cents, we're expressing our hypo 3 on the day. We get scaled out as we kind of push near the low of day there. And then we scratch the remainder as the buyers come back in. Remember, we're asking for a lot here. We're going to manage this trade much more aggressively, these attempts much more aggressively than normal. So it was at this point in time where I posted, by the way, I'm posting all this in real time. I'm not going to show you those because that's a private room. I'm sure there's plenty of people on this webinar right now that were in that room and could vouch for me here. I'm just scrolling back through it right now. 1 second. 938. Is that where we are? No, we're after that. Scaled into low of day. We'll scale more upon taking out low of day or overnight low, but then boom, scratched remainder right here at this point in time. And here I say there's a potential for the wick, for a wick up into this 55, 56 area. That's what at this point in time is what I'm posting. Because remember, we're asking for a lot right here. Look at what this market has done. So unless this was going to be a very aggressive sell-off and we just really hold kind of a faster trend, we're going to see more of a normal type rotation. And so that's what I'm calling for at this time, which we get the rotation up into that area, and then boom, we see the sellers show back up. So it was right here where I decided to short. I was uncomfortable with the way the tape had progressed here, but it was a good enough trade for me to put the trade on. But I didn't like the highs. So I say, you know, I don't like the highs at 948. And oh, I'm sorry. That was back a moment ago. So back down here again, I said I will not re-enter this short without an inventory clear higher. I need to see some shorts get stopped out before I re-enter. So now we're at the present. I've re-entered, and I said it's still not cool up at the highs. I'd been kind of commenting throughout the session around how I was showcasing how I wasn't taking any losses despite some things not working out, like in this sequence down here, being very aggressive. And I said right here, here's where I'm adding one word here. I didn't say this one word, but likely take an actual loss. And what I meant by that was here's where I am willing to take the loss. I've put myself in a position where I am getting short. I'm not going to scratch out of this thing because I'm kind of compromised. I don't like the way the tape was at these highs. There's still the potential for the market to go a touch higher against me. So I'm hanging around. I'll take a full stop on this trade if need be. So what happens? Buyers, boom. We go run those highs. Nice little wick right here. We're starting to see a little selling pressure. Looks pretty good. At this point in time, I'm definitely willing to cut the trade if we start coming up and trades being facilitated up at that 64-cent high. So, you know, I took a little bit of heat on this trade. Nothing crazy, you know. Say maximum of 10 cents. It wasn't quite that much, but whatever. So now it's got to go. This is a huge, huge deal. I talk about this in my Context Plus Order Flow webinar. I think it was the first webinar I did a month or two ago, whenever it was with Jigsaw. I talk about this exact scenario when we get to order flow using the tape. Knowing when to stop out versus knowing when not to. This today is a beautiful example of, I think the market's going to need to just go a little higher here. But I had a setup to get short, but I think this is a potential. I know this is a potential. I'm going to watch the tape. I'm going to see how it trades. If the volume dries up, which it did, I'm hanging in. Now, if the volume dries up, but then we come up and there's more volume trading back up into there, then I'm out because the volume's not drying up. But as it stood, the volume dried up and we get a move lower. I take some scale, take some profits. And that was the end of the conversation in the room. In fact, I said I was rewarded for tape reading skills. Stop/no stop. Exactly what I meant. I'm being more long-winded here because I was trying to trade in the moment and type less. So that was the session. There's a very interesting dynamic, some things that occurred here going forward, but it's just a little above our talk here today. I'm very confused, Jose Camacho, by your questions. I have no idea. You can reach out to me in private. I don't know why you're asking that. You you're privy to all the, as a student of mine, you have access to all everything. So I'm not sure why you're asking that. Okie doke. Alex asking, can you explain more why you'd be willing to take a full stop on that trade where I was talking about being willing to do that? There's a double bottom there with slightly higher low above the low of day. So he's talking about this, I guess. You can correct me if I'm wrong. Seems like a short that you'd want to cut right away if order flow didn't support it. So look, man, that it's funny. This kind of gets into market worldviews that we create, which is what I talked about for so long yesterday on my webinar. I a double bottom is not a part of my vocabulary. That is not a part of something that I monitor for. I think that is massively too, like, are you gonna, are you gonna call this a double bottom with a slightly higher low, and this is not a short? Are you gonna call, this a double top with a slightly lower? I mean, these things show up everywhere. And to me, it's way too short term of a thing for you to try and use as a market worldview to give you a directional bias. I could care less where all these little swing highs and swing lows are. I care about what the order flow looks like from moment to moment as I'm determining how and when and if not, I'm going to express my contextual ideas generated from my market worldview, which tells me where trade locations are and where I want to be leaning short or long and where that changes and where the market is likely headed to. So that's way more information than there's a double bottom and that type of thing. So anyways, it's not a part of what I do. So it wasn't a factor there. Isn't it no, it's not probably. I want to ask my students this. Do I use the term strong low? Is that a thing that I do? I don't believe so. I think I'll talk about weak lows, and those become significant. So JD's backing me up there. I will say, did we or did we not have quality excess on the low, which is ultimately saying the same thing as you, Alex, so that's fair. But that's going to be derived from 30-minute periods. That's going to be derived from the developing market profile graphic for the day. So I slow down that read of where there is, let's use your definitions here, a strong low or a weak low, right? But I mean, if we just use basic concepts, I mean, how much excess is this? It's 2 ticks, right? So if we built a profile of this market profile, we would have 2 little ticks right here of non-other periods that were also in the same range. So I certainly wouldn't consider that to be a really strong low. So again, it's pretty amazing here, the conversation we can have, and this is great commentary and stuff from Alex and a good conversation. How we end up looking at these things or defining what's a strong low or weak low or whatever depends on our time frames and our tools. And it very much is a time frame question. This could be a fantastic low for you somehow. You know, you're a trend line guy. You use some trend lines, and you know it breaks and it retests the trend line from above. So that's, you know, all of a sudden you nailed the low of day. That's fantastic. Good for you. That certainly works sometimes. Certainly doesn't work other times, right? Just like anything else. But for me, I'm really leaning on this market profile over here to slow down that read of excess and whatnot. So to me, this is a quality excess that remained, and we don't know that that's remained until this 30 minutes is done, and we start to see this C period not be able to continue to eat into the B period potential excess load that's created, and then that puts the A period highs back on the table. We go take them out, blah blah blah. I find it interesting. It's just fascinating to see us run up and tag poor lows and things like that. It's right after the close yesterday, we were talking about how that needed to go get taken out. You know, within an hour of the pit session close, that thing's done. It's going and taking that out, and right down to our 45-cent level that we had, our 46-cent level. Anyways, so yeah, that's it, man. I wanted to walk you guys through my thought process and some things I did there. Certainly not the biggest winners I had today or anything like that. Those came from this point forward. But this was a trade sequence where, look, you know, I got long here, got some scales, and got stopped. I went for two different shorts here. One was a scratch, one was a scale and scratch. And then I went for a trade here, which was a potential stop out in a tricky little thing. But the tape reading skills allowed me to hang in and see that there was no real danger as this came up, and I got to hang in to book some profits on that trade. So I love to go through the messier examples here rather than just like, well, you see guys here and you get out at the high and that's how you dominate the markets. That's not what trading is most times. Sure, I have as many picture perfect trades as anybody, you know, trust me, but the majority of what happens is much messier. So that's really what I wanted to cover today. Thanks for the questions. Thanks for the good conversation. Thanks for being here with us for Futures Friday. And we'll see y'all next time.